All right, we're getting started. Hey, yo, Mitch Goldberg here with Client First Strategy. You're watching my live stream, Be the Boss of Your Money. Talking about, well, we're talking about money. We're talking about something that's more important than just money. Well, yeah, I know there's health and all kinds of really important things, but I wanted to highlight something else. Um, I want to highlight control over your money. It's really hard to have control over your money. I talk to people all day long, and not just with my own clients, not just people for business, just talking to friends, talking to all the new people that I have been meeting lately, and it's like such a common theme, and it's. I don't know if this shocks you or not, but there are an awful lot of people I speak to. I speak to them every day that don't really have their shit together. Like they don't have a lot of aspects of their life together. Uh, money, money is certainly one of those aspects, and people don't know how to pull things together. And I feel like sometimes I can help people just by acting as a coach. You know, and I don't mean just like I'm not saying I'm a life coach and I'm getting certified as a life coach. I'm not, but I've been more or less a financial coach to people for the better part of over 3 decades. And sometimes I coach myself, but a lot of what I have learned, uh, most of what I've learned, is from my own experiences and from the experiences of my clients. Like that's like the fascinating thing about doing what I do, I think, is that I'm always learning new things from the people I work with. The stuff that I learned, you could read about it in a book or an article, find a website, top 25 mistakes investors make. But until you sit down with a human being who's made the mistake, lived through it, and how they've overcome the challenge or how it damaged their life, you really just don't know what you're talking about because you haven't experienced it. And I myself, as a middle-aged guy who's 55, I have made my own share of financial mistakes, and I've corrected them. But it took time. Luckily, I made mistakes when I was young. This is why, as we get older, we become more conservative because when you make a mistake when you're older, you don't have as many years left to recover. But making mistakes when you're young stings. But when you get older, you realize the lesson from the mistake was worth so much. And when you start to realize that your mistakes were really lessons, you heal from them. And when you heal, it's kind of like working out. When you work out a muscle, right? You work out, you break down the muscle fibers grow back more plentiful, stronger, you grow. So I like growth. I like personal growth. And I like the growth of you know, myself too. Hey, Russell is out there. Hey, Russell, how are you? I hope I'm coming in loud and clear. And while you're watching this, if you wouldn't mind giving me a thumbs up, I always appreciate that. Ahmed, the fitness guru, is out there. Thank you, Ahmed. And let me know if you have any questions. Hit me up in the comments. I love hearing from you. It's the best part about what I do. Words of wisdom, words of encouragement. Those are greatly appreciated. And again, whatever social platform you're watching from, give us a heart, a wow, an applause, or just standard thumbs up. And I'd really appreciate it. Then I get to see who's out there, and it helps spread the good word about the work we're doing here to help all people. Jerry is out there. Jerry, thank you very much, buddy. Great to see you. And I've got someone out there. It just says Facebook user, keep up the great work. Thank you very much, Facebook user. If for some reason, when you use comment on Facebook, I think you have to give them permission to show your name. But I appreciate it. So if you want to just come back with another comment, say your name, and I can see you, and I can give you a proper thank you, that cool. Or if you prefer to keep your anonymity, I appreciate that very much. Jerry, hey buddy, good to see you. Jerry, are you back in New York yet? I'm curious because we're supposed to go on a hike, you and I, right? We're going to do the Cold Spring Trail. I just have to be able to keep up with you, man. All right, so let's get into the heart of the matter. We have Rita out there. Hi, Rita. Thank you so much for joining me. And thank you, Rob, who's always with Rita, and I appreciate you both being out here. So what I'll do now is I'll just roll the quick intro. And we're going to talk about a couple of things, good things, bad things that happen to investors, and how to get over not just loss, but the really horrible feeling of loss. Because when you start to identify yourself with investing success and all of a sudden you stop having success, you start to ask, what's wrong with me? When in fact, the cause of your investing success was not you, and the loss of investing success was not you. It's really just a matter of you not realizing that it has nothing to do with you. Here we go. Great to have you back. I thought of it. I have a thought of the day. Just want to share with you. I've been a little philosophical lately. I've had a lot of life's changes, and I've been doing a lot of self-healing. And my thought of the day is that when you have a cathartic experience, when you let your loss or grief hit you, when sadness or grief hits you, don't fight it. Let it happen. Accept it, because it'll pass. And you feel better afterward. And the reason is because every time you do that, you heal a little bit, and healing feels good. Okay, that's the end of my philosophical stuff. Lots of reason to be optimistic. Still read it on the screen. Okay, that's right, Jerry. Optimism. Yup. And hike this weekend. I'm around, man. Definitely. Let's definitely do the hike. Okay. So let's just talk a couple of quick things before we get to the, let's get into the heart of the matter. I want to talk about investing loss, okay? We're going to get serious. I got my iced coffee right here, okay? I speak to investors all the time, and just not everybody is a client of mine. I speak to, it would be great if everybody I spoke to became a client of mine, right? But that's just not the way it's going to work, and that's cool. But there are so many people today who I talk to who look like they have their stuff together financially, and they don't. And they just can't figure out how to get out of things. So I'll tell you what works for me. It's not just a matter of cutting out an expense. It helps. Like, you have to be careful with expenses, careful with money coming in, careful with money going out. I get it. But there's a loss of control that people have. And it's not just a matter of like a simple thing like, well, just do these 3 things and you'll be better off. It's really a matter of doing things to regain focus and to regain control of your life. And when I need to regain control, because kind of you go in that, you have control over things, everything's going well, stuff blows up, and all of a sudden stuff's all over the place and nothing's going well. And everything affects everything else. So what I like to do is I like to get organized. And I'm not a naturally organized person. If you are, God bless you, that is wonderful. I'm not naturally organized. I know some people who are. And what I do is I start to organize different parts of my life that need attention, whether it be in the house, with the kids, etc. And I feel that it's all connected. I'm like, if you just want to take better control of your money, it doesn't work for me if I'm not taking control of other aspects of my life also. Like if stuff is out of control with the kids, or stuff is out of control in my household, in my business, then I'm not in control of anything. And that's just how I roll. Some people can be not in control of something, and some people could be in control of something. And I'm the furthest thing from a control freak. I'm not OCD at all. But I do think it's important to start to take steps to find something to take control of, whether it's cleaning one room in your house, organizing a dresser, cleaning out a closet. It starts with that. And it seems, with my fitness routine, like if I'm not in control of my fitness routine, I feel like I'm not in control of other aspects of my life. And my fitness routine is actually one of the things that anchors me to having control with my money and with other things in my life. And it's really important for me to obviously have control over my money, because I have no one else. I have 3 kids who depend on me, and it's just me. And, I have nothing else. I just what I have and what I make is it. So I really want to make sure I'm careful with it. But now let's talk about loss. You have people suffer through losses, and it could be crypto, it could be NFTs, it could be stocks. The first time I truly experienced loss for myself with money, and really went through a pretty difficult time in my career. I'm sharing with you some personal stuff. Okay, I'm getting personal with you. Okay, I'm not like other financial advisors who says, you know, um, everything in my life was perfect. Everything in my business is perfect. I never lost anybody, but everything is great. No, there have been plenty of ups and downs in my career. But the first real kick in the ass that I've had was in the year 2000 with the tech wreck. And that's where the money was. That's what we were all doing. And I'm not saying I was not 100% technology, but definitely the mistake that people made in the last year and a half with too much technology, too much pandemic stocks. I was in a lot of stuff like that up to the year 2000. That's why I always warn people that the pandemic stocks, when it's over, these things are going to blow up. I mean, I was very clear throughout my live stream, and it's made me better. And again, I was not all tech, but my drug stocks got crushed. Just basically growth stocks got crushed in 2000. It wasn't just tech. It's just that it took tech the longest to recover. And there were so many tech stocks that were tech-related stocks that went out of business and just disappeared. But you come out of it. And I remember when that happened, Google went public in early 03. And Google was like the new hero that the stock market needed. And once Google came out, like the rest of the NASDAQ and the rest of the S&P and the whole market, you can't invest directly into an index, by the way, but you could invest to a security that tracks or mimics an index. And Google kind of started us off again on a higher trajectory. And a big mistake I see people making, of course, right now is people are always going back to the last couple of winners from the last bull market. So, when you talk to people, oh, what are you buying? I'm buying Amazon, I'm buying Facebook, I'm buying Google, I'm buying Apple. It's the same stocks. And I think the toughest thing about the cleansing we just had in the market, where the S&P dropped by about 22-23% from its peak, but a lot of stocks went down 70-80% or more from their peak. We have to really start looking maybe for new ideas, new opportunities. I think it's a mistake to just keep relying on the stocks that led us up to the last, up to new highs during the last bull market, because every bull market has been led by a different group of stocks. So why would this time be any different? So we need to be careful of that. I'm just trying to throw some knowledge at you here, okay? Dropping some knowledge bombs. But people have had loss, and what happened is to a lot of people who just went through the 2021 to 2022 market drop, especially a lot of young people started to think they were really smart. I'm not saying you're smart. Go back. I'm not saying you're not smart, but just because the stock market went up because of an unusual circumstance does not make you smart. Your IQ didn't go up 100 points because you had a winning stock. Maybe, you could say you're smart enough to be in the right place at the right time with your investments, or you just chased stocks. You didn't really understand why stocks are up, which is why you rode them down. And a lot of people, and this happened to me in 2000, you identify yourself with your talents, your abilities. And then when the market rug gets pulled out from under you, it's a real kick in the butt to experience a piece of your identity either being wrong or getting taken away. And what leads to what follows is some soul searching, and it's kind of cathartic. You kind of have to make deals with yourself to be better, to not make the same mistake. You be good to yourself and you heal. And every time you have that cathartic moment, you face your loss or loss of identity or loss of whatever that you thought that was special, or that you thought was special about you, you start to heal, and healing feels good, and you come out of it stronger. This is why we always tout experience. Like I'm older than a lot of the viewers right now, than a lot of you who are watching this, but I have experience, right? And that's something I think that we respect. I have a lot of experience, and it's made me better. I got through the 08, 07, 08, 09 market crash pretty good. I really did. I got my clients through that really, really well. I got my clients through this 21 to 22, 2020, 2022 down market pretty good too, because I learned from my experience. I was in the last 2 years, I was not in the pandemic stocks. You hear me knocking them all the time. You know, the DoorDashes, the Zooms, the Pelotons, going to blow up. I've been talking about this for so long now, you know, and you've heard me do that because I have experience. I knew how that story would end. I know that when there's a very unusual circumstance and a bubble and people rushing into the same stocks, just buying because something's going up, so it must be good. And then more people buy something, so it goes up even more. The stock goes up more and more, and it validates all the people who just bought it. So new people want to buy it. That really is just a bubble, a validation bubble. And when it pops, you're faced with a loss of not just your money, but maybe a loss of your self, a loss of your confidence, maybe even a loss of your dignity. You have to rediscover that. Give yourself some grace and start to heal and learn how to do things better. I'm sorry to say that a lot of you who lost money buying Dogecoin at 75 cents and now it's under 10 cents. I don't have a crystal ball. Maybe it'll go back to 75 cents. Maybe your Hulu will go from, or Roku will go back to 700 from where it is now. It's down like 80, 90%. But I doubt it. And I don't like to be a doubter. I like to be an optimist. So realize that sometimes the best thing you could do is fess up to the mistake, absorb the hit, and move on, move into something better. And if you realize that individual stocks just aren't for you and you're just done with it, you are allowed to try an index fund. No one said you can't use an index fund. I feel like people got away. I feel like investors got away from using index funds because they're having so much fun with the individual stocks and making so much money with the Robinhood type stocks. And now they got their heads handed to them and they're like, what do we do? Maybe you go back to the index funds. There's nothing wrong with that. This is what makes personal finance personal. It's, if you really want to know, it's some people are fine for individual stocks. Some people are not. Some people can have a blend. So getting over the loss really means facing the grief, facing the disappointment, facing the fact that you weren't some stock picking guru. Face the fact that it turns out you really didn't know any better than anybody else. You just were lucky and in the right place at the right time. Which, how often are you going to be in the right place at the right time? You don't want to have to always rely on being in the right place at the right time. You want to rely on a consistent strategy, a process of investing money every month through thick and thin, dollar cost averaging, for example. That's a process over the long term. That's a process that can work. Just, trust the process and trust that the results will come, as opposed to always throwing spaghetti against the fridge and hoping something sticks, because eventually you'll be in the right place at the right time. If that's your strategy to recover, if that's your strategy going forward to build your financial independence, it's not going to be a workable strategy. And I think if you could admit that investing is hard and you gave it a shot, things didn't work out, and now you're going back to indexing or some other strategy, I think that's okay. And I think the sooner you do that, for most people, the better off they're going to be. A lot of what I do is not telling people what to do. All right. A lot of what I do is that people think, oh, you're in high finance, you're a financial advisor, you're picking stocks, you know what's going on with crypto, you can explain what an NFT is. That's all well and good. And I feel like I know a lot. I've written many articles for CNBC. I'm in the media a lot. Okay, humble brags. But it still comes down to the same thing. It's what's best for your unique situation, your personal finance, your risk tolerance, regardless of what we know. And a lot of times what we think we know turns out to be wrong as time goes on. Time has a way of proving us wrong sometimes, right? And proving us right, and then wrong, and then right. So that is something I just really want to convey to you. Investing is humbling. So what I was saying is, it's not that I spend so much time telling people what to do. It's I spend so much time telling people what not to do. I've made remarkably very few changes in my own personal portfolio and my clients' portfolios because of this down market. investing with the expectation that we're going to have a down market, a bear market, is built in. And bear markets are not separate from bull markets. Okay. Bear markets are part of bull markets. It's like success and failure. People try to compartmentalize success and failure. Here you have success, here you have failure. You want more success, less failure. No. What I say is the failure is part of your success journey. It's just a different way to look at things. And I feel that I am a better human being, a better financial advisor, better with my money, and better with other aspects of my life when I realize that. I just want to impart that to you. So, got a couple of comments out there. One of the great things about investing is this: when you make a mistake, you can sell it and never think about it again. You get a fresh start. Pretty good. Yeah, you do get a fresh start. And that's the beauty. As a branch manager once said to me, Mitch, there's always another boat. There's always another idea. It is endless, the opportunities to invest in. I think the biggest problem with an opportunity is when you invest in something and it goes down, it no longer looks like an opportunity. So you go into the next shiny thing, which then looks like an opportunity, when you didn't give the opportunity you were just in time enough to work. And this is why we say time in the market is more important than timing the market, right? Who's this? Hi, Daddy. I love you, superhero. It's my daughter. Thank you. I love you too. And Howie, keeping it real. That's right. Speaking of real, no one is more real than you, Howie. So glad you're here. Thank you very much. Jerry, you may want to turn down the background music. All right. You know what? I will do that. Okay. So let me turn that down. All right. Is that better? Probably should have looked at your comment 10 minutes ago, but hey, man, that is where we are. Believe it or not, having the background music is going to make my video easier to edit for Natalie, because now Natalie doesn't have to maybe put the background music in it. Okay, so let's take a look at how markets did today, and then I'm going to let you guys go. Okay. Okay, let's put up another comment out here. Yep, that's right. All right, so let's go to screen 4. Not letting me go to screen 4. Let's try that again. Should I just freeze? Should I just freeze? All right, so whatever. Well, I'll just talk about the markets real quick, okay? So first, big news out here: Robinhood. Okay, and I've said this before, that if you have an account with Robinhood, the brokerage firm, I believe you are in an abusive relationship. No knock against the hoodies, the people who felt they were part of the Robinhood community, although that is eroded. Nobody, I think, really cares about that anymore, because now they see that the pandemic stocks and the cryptos, that they were basically smoke and mirrors, and there really wasn't anything there, but you traded your ass off because of payment for order flow, which is what Robinhood does. Robinhood does not, unlike a financial advisor, okay? A financial advisor wants you to hold steady and not trade, as opposed to Robinhood wants you to trade more, because the more you trade with them, the more they make. When we all know that over trading, it's like the very first mistake that investors make. It's worse than buying high and selling low. The first mistake that people make, the most common one, is over trading their own accounts. Okay, so Robinhood is all about the gamification, the casinoification of the stock market, way more than like anything we saw at the web-based traders, the e-brokers, Ameritrade and E-Trade and all that, when they came out in like 2000, when people were starting to get trades for like $5 or $7 a trade. Robinhood blew the doors off that with what they've been able to do with payment for order flow. Okay, the next thing to talk about. Okay, so by the Robinhood stock. Let me see if it'll work now. Nope. Okay, Robinhood stock. The stock is $9, and it was as high as 85. So it's almost a 90% hit to the stock. But eventually, companies that don't do the right thing don't do well. Starbucks had good earnings after the market. The stock is up about 2% after market trading. PayPal is getting a new CFO. Stock is up 11%. Actually, PayPal just broke 100 in aftermarket trading. It's up $10.47. Airbnb came out with a really good quarter, but the stock is down about $10.75 because I guess they didn't have such a great. I guess they didn't have such a great forecast going forward, but maybe Airbnb is being impacted by COVID or monkeypox, whatever. But that stuff happens. Okay, yeah, not that it's like a normal thing, but it does happen. Okay, so markets were down a little bit. We had the Dow down about 400 points. Finally, a down day after a really solid July. We expected the market to go down. That's not a surprise. The market was up a lot last month. It's still ups and downs. What was it down for today? I would say the market was down 10% on Nancy Pelosi's visit to Taiwan. 90% was because several officials, Federal Reserve officials, said that they're not done raising rates. They are still going to be hiking rates, and they need to see several months of inflation coming down in order to believe the scenario that inflation has peaked. I think inflation's peaked, but I think the Fed has made so many mistakes, colossal, huge mistakes, that they're going to be very conservative in everything they say and do. But it's all up in the air. Everyone's data dependent. This Friday, we see the latest employment figures, and we'll see if the employment picture is weakening a little bit. We saw job openings go down by about 5%. We saw that this morning. So a little bit. Okay. And lastly, treasuries. The treasury market was basically down across the board, sending yields up a little bit. The yield curve is still inverted. The 2-year, I'm just looking at it right now, is still 305. The 10-year is 275. So still about 30 basis points. This is about as inverted of a yield curve as I've ever seen, and it's really sticking around. Inverted yield curve either means we're heading into a recession or in one. I think that is probably as significant or more significant than 2 quarters in a row of negative GDP, which we just had. Lot going on. Yesterday, I told you Morgan Stanley said, enjoy this rally. It's good because it's going to end soon. We're going to recession. Goldman Sachs says we've got more to go and we're not going into a recession. And you just get that. Every day you read articles, you read content, and it's back and forth and back and forth. And ultimately, you just have to make the financial decisions based on what you need to do. And if you're like me and you're a long-term investor, these short-term prognoses don't really mean a whole hell of a lot. Okay, that's the end of the day. That's my live stream for today. I'm going to get going. I'll be back tomorrow. Thank you so much for your comments, for the thumbs ups, and for staying with me. I really appreciate it. It means more than you will ever know. And I'll see you soon. Bye.